Okay, guys. Happy New Week. This is the weekly outlook video for Monday, 20th to 24th of March, 2023. Okay. For the past few weeks, I haven't uploaded any outlook video because number one, I had an issue with my laptop, which I just got repaired and my health hasn't been the best. Okay, but yeah, I thought I should explain for those of you that might have been wondering why there haven't been any outlook video for the past few weeks. So, as usual, we are going to start with DXY. Let's start with let me check the monthly if there's anything significant. On the monthly, we have the open. We have January open, which is right here. I think I should even mark it. Is this January's open? Yeah. So this is January's open price. Let's gonna mark this as January's open. Okay, so we have the January opening price or the New Year opening price. Okay, so that opening price is very significant. Okay, it's very, very important. And the market had reached into it and got a really impulsive reaction from it last week, which I outlined before the fact. Okay, I made a short video that I posted on my Telegram channel explaining what I wanted to see on DXY prior to CPI. Okay, I mentioned that price was sitting around here, and I explained a number of reasons why I wanted to see an expansion to the upside, which is what happened here. Okay, one of the reasons why I said I wanted to see an expansion is also because of the new um I think we have one day fair value gap move. So like I said, one of the reasons I mentioned that I wanted to see an expansion here last week is also because of the new year open, okay, the opening price for this year. Generally, when price returns to the opening price, yearly opening price, there are very significant price points. Okay, so if the market is bullish, ideally, the if price has rallied and closed above it on the monthly, it should not close back below it. So the opening price are like PDRAs as well. Okay, I call them opening bells. Um, so generally, if price closes above the yearly opening price, ideally it should not close back below it on the monthly. Okay, so that is at the end of March, ideally price should not be lower than the opening price. Okay, obviously it can trade it during the month, but at the end of the month, price should be above the opening price. Okay, so it should have turned it into support. That is what I'm trying to say in essence. Okay, so if we go back to the weekly time frame, we see that so let's analyze the order flow. Okay, because over the course of the weekend, I was looking for reasons to be bearish on DXY. Okay, and I just couldn't find any reason. I just can't. because there's a lot of narrative on Twitter, people expecting lower prices on DXY. I don't know why, okay? But right now, I just don't see why I should be bearish on DXY. I don't see that. Okay, if I thought I'm going to be bearish, it's going to be short term, right? Why is that? First, when we go to the low time frame, daily, I would show you a lot more things, but let's focus on the weekly time frame, right? We have this up close candle here, that is a bullish OB, right? We have this up close candle as well, that is also a bullish OB. I said bullish, sorry, bearish. Both of them are bearish order blocks, right? The up close candle, we saw an expansion there. This one has fair value gap. This one does not really have fair value gap, so maybe we shouldn't consider this as an up close candle, but this is a valid up close candle. That's a PDRA. Okay, now if we grade the PDRA, first and foremost, we have the body of the candle, body of the OB. If we extend this out in time, that is a PDRA. In addition, we have this mitigation, I said rejection block, right? This is the body of the OB, this mitigation block, and we have the consequent encroachment of this week, extend it out in time. Okay, that is equilibrium, that is consequent encroachment of the week. Okay, that is also a PDRA. All right. So we have, if we grade PDRA on this price leg, okay, we have the weekly fair value gap, we have the body of the OB, we have the rejection block, we have the consequent encroachment of this week. Okay, so we have 1, 2, 3, 4 PDRAs that has failed on the weekly. This fair value gap failed to reject price, price closed above it, dropped down, used it as support, closed above it, the rejection block above the consequent encroachments of this week, right? And also rallied above it. Okay, I still believe once price rallies above it, the PDRA is invalidated, right? So if we decide to use that as our guiding principle, generally I believe that as long as price has not closed below a PDRA, that PDRA is still valid. But ICT teaches that once price breaches the mean threshold of that OB or PDRA, it is less probable, or it's most likely, it is highly likely that the PDRA will not hold. Okay, so we have 4 PDRAs here that the market has closed above. Okay, if we look at this other side, this is a reclaimed block. So if we extend this out in time as well, price has also closed above it. This reclaimed block, this down close candle here that has been reclaimed. So um we have multiple bearish PDRAs that has failed. Okay, after 1, 2, 3, 4 up close candles on the weekly time frame, it's natural to expect this kind of retracement. So I know why people are calling for this low, like, or this volume imbalance on the daily time frame. Okay, so um if you look at the bullish OBs, like I said, the market has rallied above this up close candle. This should now become a bullish reclaimed block. So ideally the market should not close below this up close candle on the weekly time frame. So at the close of this week, the market should not be below this up close candle. That's one. Then two, we have this down close candle, that is a bullish OB on the weekly. If we measure the mean threshold is somewhere around here. Will it come here? Honestly, I don't know. I don't know, but it's good. Okay, it's good, but I don't think it should, because this is a fair value gap, right? It is a range in price. The market has closed above it, dropped down to use it as support, and then we see this expansion. Okay, so the market ideally should not come back into this fair value gap. Ideally, it shouldn't. It can, but it's more bullish when it doesn't come here. It makes a lot more sense from an algorithmic standpoint if it doesn't come here, right? And if you also look at this fair value gap, this is a balanced price range. Why? Because the market has passed through it, dropped down into it, and moved away from it. That is what defines a balanced price range. Price must pass through that range three times. Okay, the first time is redelivery or repricing. The second one is buy side provision. The third is sell side provision. So for a range in price to be balanced, three things must happen. Number one, price must pass through it. After passing through it, it must provide both buy side liquidity and sell side liquidity. And from here, we see that price has passed through it, dropped down on this candle first to provide sell side, and then rallied up to provide buy side. So this is a range in price that ideally price should not come back to. I hope that makes sense. Okay, so this is a bullish OB. Ideally, you would expect that the market should be away from that OB. Okay, what ex though price could convert to the mean threshold, but ideally for a solid candle like this, it doesn't need to come to the mean threshold. Doesn't mean it can, but it doesn't need to. So if at all, I would expect a bit of, especially considering it's FOMC and price can be really exaggerated during high impact news. You could get a return into the mean threshold of this OB and then bounce from there. But I would rather not see that happen. Yeah, I would rather not see that happen. Um, but it could really. Let's see. So on the weekly, I've outlined multiple bearish speed arrays that has failed. The price has closed above or rallied above, and I've outlined the bullish order blocks on the weekly as well. The bullish OB, we have the bullish reclaim block. Price has rallied above it. So this up close candle, smart money sold into it, into this rally. When the market was going up, they sold into it before we had this rejection. Now the market had rallied above it. What generally happens is they are going to mitigate their orders. Okay, so there are short positions here that are going to buy back inside of this OB. Okay, because it has been reclaimed, they use it as a sell initially because the market has rallied above it. They are going to use it as a buy. So there are short positions here. They are going to take it off. Okay, so that's why I have been bullish on DXY despite all of these retracements. Okay, but my validation level is the opening price. Okay, the January opening price. If price closed below it, then I'm going to switch bearish. Okay, but in the meantime, I'm just still watching really. Okay, so if we go to the daily time frame, let me get rid of this yeah, and also get rid of this. Yeah, now focus on this area in price. Focus on this area in price. This is a new week opening gap that I've extended out in time. It is not only a new week opening gap, but it is also a new year opening gap. You can see that this candle, look at the bottom here, you can see that's December 30th, and the next candle here is January. So there is a gap between the close of last year 2022 and the open of this year 2023, right? When the market came to it, we saw an initial rejection from there before it eventually closed above it, used this as support and rallied into this volume imbalance. And now we're coming back to retest it. Okay, so on the monthly, we have closed above it. Okay, February closed above the new year opening gap. Okay, and March is coming back to retest it. So I believe that this area in price should hold price on the weekly. That is, we shouldn't get a weekly close below it. So that's why I am leaning more to the bullish side, despite the fact that we've had a break of structure. I don't consider it to be a valid break of structure, in my opinion. Okay, though it looks valid because the market has broken below here, we rallied into it, we are rejecting. So do we reject down into this weekly fair value gap, or first, this is the level I'm watching. All my focus right now is on this level. Okay, all my focus right now is on this level. You get a close below this line. Okay, that line I've outlined it because that is the main threshold of this down close candle. Okay, that's the main threshold. If you get a close below it on the daily, then that will be more convincing that okay, then we are coming for this low and potentially this weekly fair value gap. But until that area in price is invalidated, I will be anticipating bullish price action. Go to the 4-hour time frame. On the 4-hour, we see that this is a a bearish candle, bearish OB. There's fair value gap right there. The market had an impulsive reaction from the new year open price, the opening price for this year. It tapped into it and we got this impulsive reaction that broke this high, closed above this power fair value gap and the bullish and the bearish OB. Am I confusing you? So bearish OB. So it has invalidated multiple bearish PDRA. Okay, this up close candle, which is bearish OB, and this bearish 4-hour fair value gap. Okay, and price is coming back down to close this void that it created when we had this impulsive reaction. This is displacement. Okay, this is displacement that broke structure, invalidated multiple fair value gaps. So I would anticipate that this area should hold. So I'm just watching to see if it wouldn't So if by the end of Monday, let's say we are here, then I would assume that I will use this OB as a breaker for lower prices. But in the meantime, I would expect that this 4-hour OB should hold. The market has not closed below the mean threshold, it's still holding right now. So, and if we also go to the lower time frame, particularly I think 15 minutes is more visible. We have what looks like a market maker buy model. Okay, initial consolidation run to support and then potentially smart money reversal, right? We have relatively poor high above here. We have this trend line liquidity here as well. And overall, we also have this trend line liquidity as well. So we have one touch, second touch, third touch. Generally, when you have trend line liquidity like this, especially when you have three, the third one oftentimes will turn it into support and rally up. Okay, so we have trend line liquidity, retail resistance, we have FOMC. Where is the liquidity? The liquidity is to the upside, right? We have relatively poor high here, we have relatively poor high here, relatively poor high here, trend line liquidity here, and overall big trend line liquidity here. So I'm anticipating smart money reversal anywhere around here for higher prices. Okay, but I may be wrong. Okay, I may be wrong, and I've clearly defined my validation points. First, I'm looking at the 4-hour OB I showed you on the 4-hour time frame, and then if you get a daily close below the daily bullish OB that I also showed you on the daily time frame. Okay, so that's my expectation for DXY. I'm looking for reasons to be bullish. Okay, um, I'm anticipating SMR, smart money reversal, to take out this area in price. Now, if we go to the daily, so on the daily, where we see this volume imbalance here as well. Okay, and generally the way the market reacts to volume imbalance is usually impulsive. Okay, we see from here right into the volume imbalance, we see this aggressive rejection. From there, we see from here volume imbalance, market rally into it, we see the impulsive rejection. Also from here, volume imbalance, market rally into it, we see this impulsive rejection. So generally, if the market is bearish, we see rejections from volume imbalances. If it is bullish, we see rejection from here. So we might see a rally from this volume imbalance. Let's see, we get a daily close below it, then it is more likely going to use it as resistance. Another thing that is giving me a bit of concern on DXY is this daily fair value gap, because the market has closed below it, and when the market closes below a PD array, it tends to use it as resistance. So it's interesting to see how the market will react here, if it will use it as resistance for lower prices, or it should close above it and then use it as support to launch higher. We have this volume imbalance here, we have this volume imbalance here as well. So those are particularly this one. This is a strong draw on liquidity. No, this is like a, an imbalance. Okay, so it's an imbalance, a kind of imbalance. There is no, the body of the candle is not overlapping trade. So this is also a strong draw on liquidity for this week. Um, so I think we could end up getting here before the end of this week. Let's see. So that's that on DXY. Let's go to In addition, okay, let me show you the um CO2 report. We see from the CO2 report, the last on February 21, the highest amount of short positions they've ever had on EU. And prior to that, they had the highest amount of long positions they have ever had on in the last 1 year on DXY, last 1 year on EU as well. So has there really been any significant drop? Has the market really dropped? No. Even despite the drop, the difference in contracts from May 7 is just about 10,000 contracts, which is not significant compared to the overall amount of contract they've had on. Okay, if you compare the highest amount of long positions they've had on in the last 1 year is 28,000 contracts. Okay, net position. Okay, not like this is only long or short. The net position, the highest net position they had that is bullish in quote. Okay, in the last 1 year is 28,000 contracts. This is the highest amount of short positions they've had on in the last 1 year, which is still really close to the net position they've had on their current net position, which is pretty close to the highest amount of short position they've ever had on in the last 1 year. DXY as well, 15,000, still around the same range. So it's not like they've switched bearish. They're still very bullish based on CO2 report. Smart money is bullish based on CO2 report. Okay, so um that said, let's go back to trading view and look at EU. So I'm not going to spend that much time on EU because it's like a replica or inverse replica of DXY. We have this bearish OB. This is a bearish OB. The market has traded down close below it. So if we measure the consequent encroachments, I mean the mean threshold of the OB, that was where the market rejected from last week aggressively, but then we completely retraced the whole rejection. So the OB is still very valid. The market has not breached closed above the main threshold of this OB. Okay, and we have DXY tapping into its own main threshold. I mean, we have EU tapping into its own main threshold. DXY failed to do the same. So that is sign of strength on DXY and sign of weakness on EU, right? And we have this fair value gap as well, the weekly fair value gap. The market has closed below it. We expect that it should now use it as resistance. Okay, although we have this fair value gap here, but I believe this should be left as a breakaway gap. That is my personal belief. And we have this up close candle as well. That is also a bearish OB. The market has traded below it, closed below it. That is a bearish OB. Okay, and this range in price is also a BPR rebalance price range because the market has passed through it, has provided buy side and provided sell side. So ideally, the market, whenever there is a rally into it, ideally there should be a rejection from it. Okay, so I am looking for lower prices for this week until proven otherwise. If you look at the daily, we see that the market rallied into that fair value gap on the weekly and rejected. The fair value gap is still very, very valid. This fair value gap here. Okay, that's what I mark as a tick candle. So we go back to the daily time frame. The market rallied into it last week. We see an impulsive rejection, that is displacement. Okay, it's created fair value gap. The market has rallied into the fair value gap. So the fair value gap is still valid as long as we don't get a close above it. Okay, if we get a close above it, then it's more likely going to drop down, use it as support for higher prices. Okay, and another thing of concern here is this trade drive, and then there was also an SMT divergence between EU and GU. There was EU made a lower low, GU made a higher high, DXY made a lower low, which is a sign of weakness. So based on that, we should be looking for lower prices, but because of other higher time frame factors from weekly, that is why I am leaning more to the bullish side on DXY until proven otherwise. Okay, so let's go to the 4 hour time frame. So look at this candle. This is like really crazy displacement. Okay, and the market is coming up to fill the void that was left behind with this displacement. Okay, it's like this year's CPI is, maybe they are waiting for the next day for it to play out. Okay, because this was Tuesday there wasn't really any significant price move, and then on Wednesday we saw the effect. Okay, so I'm looking at this 4 hour breaker. I'm watching to see how the market will react if we get there. Okay, but then we now have a potential. This is one, okay, still very far away. All right, so I'm looking at this breaker first and foremost. If we close above the breaker, then anyway, it could go as high as this high. That is the high of the liquidity void. So maybe we fill it and then we reject. So I'm looking at a potential market maker sell model. We will go to the 15-minute time frame. Okay, so I'm looking for a potential market maker sell model. Maybe we rally into this area, We also have a breaker here. We extend it on the 15-minute time frame. The breaker will go around here. So we could bump this power breaker a bit and then reject from there. So I'm looking for lower prices. We have this trend line liquidity that is developing here. We have relatively poor lows below here. This low, this shallow, that's relatively poor low. We have this consolidation here. So I'm anticipating smart money reversal above here, but it could also end up, I don't see it taking out this high. Okay, so this is area will be my focus. I'll be looking to get a one shot one Q setup, and then I'll be looking at this loop as a target and potentially January's loop. Okay, if I'm wrong and it turns this 4 hour breaker into support, then this fair value gap on weekly, this weekly fair value gap would be my draw on liquidity, and then when we get there, I'll be looking, I'll be anticipating a rejection from there. Okay, so that's that for EU. Let's quickly go to GU. GU is more bullish compared to um, EU. So likewise, we have this volume imbalance here. We have this fair value gap. So at least we could expect that the market should come back to close this fair value gap, even if we get higher prices. Okay, my only concern for, as far as my bearish bias is concerned, generally for foreign currency, is that if GU has relatively poor high here, so the market could go up to sweep it, but I don't think that is going to be the case because we have already swept. Look at the body of the candle. Okay, if we remove the wicks, the body of the candle is right here. We have swept this high. Even this high, there was a sweep, a slight sweep above it. It's not very It's not an aggressive sweep, like it didn't really deep into it per se, but we actually get a small sweep. Let me see if I can zoom in on it. You can see there was a, let me bring this down a bit. If I move this to the exact high and then I zoom in on it, you will see that there was a slight sweep above the high. Okay, right there. What is visible now? You can see there was a slight sweep above the high, and this is now an intermediate term high. So ideally, the market should not even come back there again. The intermediate term high on the weekly. So on GU, we have this weekly fair value gap that market rejected from initially. This is the second return to it. So wouldn't you expect a rejection from it? Would you? I mean, like, I don't see why I should be bullish. The only reason why I might want to be bullish is the relative equal high. Okay, but this is a weekly fair value gap. The market had rejected from me the first time, traded below this low. That is a shift in market structure based on ICT. But based on my own personal preference, I like to see a close below for me to confirm a break in structure. And we actually had a break below on the daily, not on the weekly. So this is a break in market structure. This is basically a retracement into premium for lower prices, in my opinion. Okay, we have that fair value gap on weekly. This fair value gap, this weekly fair value gap, we have some new week opening gap which I've marked out here. We have this balance price range at the high of the fair value gap. So this fair value gap is my focus. I'm watching to see if it is going to, I expect that it should reject price. Okay. So I'm just watching to see, okay, if I'm going to get a short setup inside of this weekly fair value gap. Okay, if we go to the daily, we have this high here, that is an intermediate term high. Ideally, the market should not close above it. The close above this intermediate term high confirm a bullish bias. For me, daily close above this intermediate term high. Okay, so if we look at this as well on the daily, this is a long term high. Okay, very rarely do you see that the market breaches long term high when we are bearish. Okay, we see this long term low, the market has already breached it. Okay, if we are bearish, you want to see the market breach long term lows and respect long term highs. Okay, so you can see from here this rally, the reason why this relative equal high forms is because this is an intermediate term high. There's a short term high to the left and right of it. That is why the market could not rally above it despite the rally on GU, on EU rather. Okay, we see this aggressive rally all the while that EU was rallying up, GU did not because of that intermediate term high. Okay, so we've broken below a long term low. This is a long term low because we have an intermediate term low to the left and right of it. Okay, so this is an intermediate term, this is a long term low because we have an intermediate term low to the left and right of it. This is an intermediate term high because we have a short term high to the left and right of it. So ideally, the market should not close above this intermediate term high. A close above it will confirm a complete shift in market structure, a change in state of delivery for higher prices. Okay, so this is the weekly fair value gap that I mentioned here, the thick line. So I'm anticipating that we'll get a rejection from inside of the fair value gap. Okay, and on the daily, we have this daily fair value gap from this high to this low. The market has rallied into it, first time rejected. We are coming back into it. This is the high. Okay, so price is inside a bearish fair value gap. Why would I want to be bullish inside of this price? Why should I be bullish when we haven't gotten an invalidation of it? Okay, leave out all of this consolidation. Focus on the PDRA. Okay, focus on the PDRA. Okay, we have this fair value gap on the daily. We have this weekly fair value gap on the weekly. They are bearish fair value gap. They are bearish PDRA. So you would naturally expect that you should get a rejection from it, right? And we have fair value gap here, we have fair value gap here as a downside draw. So I'm anticipating lower prices for GU, for EU, and higher prices for DXY for this week. I may be wrong, I've clearly spelled out my invalidation point. It closed below it, and I switch bearish on DXY and bullish on EU. Okay, last thing, if we look at GU has made a new high, has already breached this high. EU has not, so that is a bearish SMT divergence. DXY making a higher high, that is a sign of strength. So let's see, I'm really curious to see how the PA is getting developed for the week. So that is that. If you have questions, feel free to ask in the comment section or ask on the Telegram channel. So I'll see you guys in the next video.